JB here. Hope everyone's doing outstanding. Friday, July 18th, 8:58 a.m. on this fine morning. Talk really quick about the market. Some names I'm looking at go from there. S&P futures slightly in the green here this morning on the heels of record closes yesterday. S&P closed at a record high. NASDAQ closed at a record high. It's fourth straight record high close. I think the most since November. All in the face of chaos, right? The tariffs, the CPI data, PPI data, monster retail sales data this morning, yesterday morning, and Powell, right? Oh my gosh, Fed Chair Powell's going to get fired. Market chaos, just pretty much any kind of market headwind you can think of. I mean, how long ago was it that the U.S. rating got downgraded, right? Oh my gosh, that was going to be the next. That was going to cause the yields to soar and just cause the market to crash. And then here we are, right? I don't know how many percent we are from that event, but there's been so many events so far, and we're just starting the second half of the year. So at some point we'll have a pullback, right? You can't sit here and think the market's just going to keep melting up. I mean, maybe it does, right? But you got to be open to both sides, and the higher we go, the obviously the higher the probability that there'll be some pullback, and so always open to that. But for now, my hope through the summer is that maybe the S&P, and I keep talking about this too, that they Nasdaq and S&P kind of hold their ground, chop around, consolidate, what have you, and small caps takes the reign, takes the baton. So we'll see how that all plays out. But another great headline on Market Watch this morning: stock market complacency is on a collision course with tariff-induced inflation. Investors buckle up. I mean, you could have wrote that headline and put it back in April or May or June, and it was wrong, wrong, wrong. So I guess if you keep putting that headline out, at some point it will be accurate. You have to think that even if it's a little, tenth of a percent or whatever, there's going to be some kind of tariff-induced inflation. It's going to happen, whether it be extremely small, a lot, more than expected. It's going to happen, right? So, but there's always things. Policy changes causes inflation or deflation, or so there's always things that policies always are changing, right? So it's just this one is very easy to correlate, or at least create a case of this is going to be bad for inflation. And since COVID, obviously inflation has been that hot topic that just doesn't go away. But so that was the latest headline. Anyway, so talk really quick about the markets here. S&P, I put the SPY range 617 to 628, and I don't know if I did that last week, midweek last week, but sure enough, what happened Wednesday? We almost got down to 617, and then yesterday up to 628, closed pretty much exactly 628, 628.04. You have to think of possibly maybe all the way up to 629.80 in the overnight hours, so maybe 630 gets tapped here today. And then we'll see how next week plays out. We got all those market headwinds out of the way this week with the CPI to PPI and the retail sales and then bank earnings. So next week is more about the earnings. And then the final week we get the Fed meeting. So with all this craziness around the Fed building and Powell and stuff, that they're not going to, I mean, you would think they're not going to cut rates. So the market's pricing like a 92% probability of no rate cut. So it's more about the commentary again. So, and especially take a look at the inflation data has cooled off. So how is Powell going to spin that? And I'm sure he'll get peppered questions. But for now, market's holding up pretty well. And the thing, people talk about the tariffs and all these other possible headwinds. The thing that worries me is that the 30-year yield over 5%, right? So it happened back in the middle of May. It back over 5% at the start of the week. I just want to see that back under 5%. That would be like the concern, that to me, that if yields just keep going up after that, if they hold 5% and then those yields it's just not a good thing, right? So that's that. And then some other just tidbits here. The amount of stocks trading over their 200-day moving average on the S&P is still only at 60%. So, if the glass half full scenario, you say, wow, there's still some opportunity for upside. So we'll see. All right. So that's the overall market. I expect some chop here today. I hate gaps higher, right? So it's not that huge gap here this morning, but it's similar to Wednesday where I had that big gap, the reversal, then that Powell news. Don't want to see, I like to see like a flat open sometimes. Yesterday we had a flat open. That panned out well, but we'll see. Maybe we get a little pull at the open and then a bounce. All right, so that's that. Overall market, so Netflix reported earnings after the close monster, right? I mean, if you look at the year-over-year, quarter-over-quarter numbers, right? It was like a 50% revenue growth from the same quarter last year. Just impressive, right? Billions of dollars. And then earnings, $7 and whatever cents, a big beat. And then they raised guidance. They don't roll out their sub ad numbers anymore. So that's kind of like, I mean, it makes sense, right? Because it's more now that they're not, they're generating revenues, generating profits. It's a little different story than it was back in the day when it was kind of like early stage company, right? So you take a look at the stock, and gosh, I remember talking back in April when Liberation Day was coming, the tariffs, February, March, April, that Netflix is going to be a name that kind of does well. It's like a heads it wins, tails it doesn't lose scenario, right? It's going to do well even if there's recession, right? People maybe they cut other things, but they're still going to have Netflix. Maybe they'll have more time at home or whatever. Um, and then on the flip side, it's going to do well if there is no recession. People are going to you know keep their services. More people are going to subscribe, and not only that, they have their ad supported model now where it's a heck of a lot less expensive than it used to be. So instead of spending $24 on no ads, you can spend like $4.99 or whatever the current price is for ads. And someone going to trade off that coffee at Starbucks, well, maybe it's a half a coffee for the Netflix, or they're going to cut the Netflix, right, and miss some of their favorite stuff. So anyway, great story. The thing is, you take a huge beat and raise. It's just the stock is up so much over the last couple of months. Some of it seems to be somewhat baked in, I guess. And then the other part is it's just out of it's more of a function of that it's run up so much. The thing is, if it dips more here, and it was 1241, yeah, 1235. If it holds like 1230, 1235, I might look for some bounce plays. Right, just take a look at the trade over this week. That's kind of like the range it's been holding, and then maybe it sets off uh, for a little bounce here today. So I'm not sure if I'll trade it depending on the premiums, but if you did have calls or puts today, they're going to get smushed. I mean, stocks, was it down 2% maybe? I don't even know what the exact number is. But on to others. All right, so now just individual names here. SERV Robotics all the way up to 1240 yesterday in the morning. I used the move to close some of my August strikes out for nearly 100% to cover cost. I still have the Septembers as well, and I'm going to continue to look for opportunities to add more strikes because, I keep saying 1375 is the next big area, then all the way up to 18 for the gap fill. And it's similar to Joby. And Joby, it took, I mean, how many months have I've been trading Joby? All the way since late last year. And it took a while for it all of a sudden to catch fire. And it's like SERV. I think it's undiscovered or somewhat undiscovered. Plays right into the robotics, the AI play, the last mile play. It has those great partnerships similar to Joby has with Toyota and Uber. It has a great board and leadership team that all have hands in all these other companies. It had the NVIDIA stake, which NVIDIA closed out at the start of the year. Some of the reason that gap in February happened was because of that NVIDIA stake. And to me, I mean, it's great to have the NVIDIA stake, but I mean, are they going to acquire SERV? They're not going to acquire SERV. Are they going to do an activist stake? No. So it was more like, and I don't know, some of their stakes that NVIDIA had was because of acquisitions of other companies that had stakes in other companies. So anyway, love SERV here, sitting here at 1220. It was like 1250 in the overnight hours. I don't know what that was. But again, I think it's just one of these days, weeks, it's going to take off and it's going to be off to the races. Hopefully today's the start of continuation. I mean, it's up 3 days in a row. 1375, the next big area. So that's that. And now on to Joby. I mean, what a monster Joby has been this week. It's up 45%, up another 8% yesterday. I mean, all-time high close, all-time highs yesterday. And then it was 18 bucks in the overnight hours and it's pulled back. It's just a matter of time before profit takers come in. It'll be like a snowball, right? And it's unfortunate. I mean, it's down here in the pre-market. It's trading at 1691, close 1772. But I mean, just how it goes. I mean, it's up so much. It's just going to happen. And so for me, if it does pull back, there's a gap at 1495. So that'd probably be the key area. If it holds that, then I'll be good to go to add some more strikes or at least scale in some more here. You just don't know, right? So at the same token, it could trade into the 20s and beyond. So my thought is that if it does have a pull, I'll add some more. If it shows strength here today, I might like to get some more calls to play for a move into the 20s next week because it is the weekend. So if it can hold green, it could be one of those names that has continuation. But just a monster here this week. Thankfully paying off. Just disappointing, right? My July 11th strikes, I think they were $8 at the highs yesterday. So, and I got those at 35 cents. But it's the hold, right? There was a piece, I don't know where I saw it this morning, around the market. And it's like, even if you held from 1970s or whatever, all the way up to now, and you're like more of an active investor or trader, you had to ride drawdowns of like 47%, 58%, and some of these individual names, 87%. So folks who you see and they have positions, it's most like you can't stare at the screen and refresh your accounts, or you sell the position early, right? It's just how it works. So it's very hard to hold some of these names. And Joby's gonna be another one of those. I mean, up 45% this week. It would not surprise me if it's down 25% next week. No, not for any other reason. People taking profits. All right, so that's Joby. MDB back to life. Disappointing to watch it here yesterday because it's rallying, and my 225 spec calls are not rising in tandem, right? I was hoping they'd be up over 100% at times, and they're just slightly in the green now. So MDB has done this the last couple of Fridays. It has these huge spikes right at the open, and like a fund schedules their buys on Friday mornings. I don't know. So if it does that again today, I'm going to be very quick on the trigger to close some out to cover costs and then ride the rest into the afternoon. That's the thought process here. I mean, it was 220 yesterday. If you can get through 220.07 or so, I think it's off to the race. Call me crazy. I think it goes to 228. I've mentioned this too. It's earnings run, right? Back in its last earnings at the start of June, all the way up to 230. And you thought the earnings were so good. I thought that was it, that it's going to go run and gun, 230, 235, 240. And then it just came under pressure because some people, I think maybe the luster for cloud names is losing its luster to snowflakes. I don't know if that's some of it, but I think there's an opportunity. So if it does hold 220 here today, I might look for some more strikes into next week. And then some other earnings plays. Oh, my chart's a little messed up here. Deck reports next week. Retail sales data on yesterday put kind of a bit in some of these names. Deck, RH had a nice day yesterday. So Deck would be one I look for premium build into next week. The 50-day moving average 209 and 109 and change, excuse me. That'd be a target before earnings, and then hopefully locks them in to cover cost. Still eyeing Reddit here. You still have a potential bull flag setting up, but it's got to find some support. I don't know if it's going to go all the way down to its 200-day at 133, but certainly a name I'm always looking, especially on Fridays as its premiums come out for some spec lotto. So if we find some footing here today, don't be surprised to add that. And then last but not least is Roku. And it's if you look at a chart on Roku, it's just remarkable stuff. So it had that big sell from February. It's February earnings highs when it was over $100. And again, sold off similar to like you saw some of these other names. Oh, there's a recession coming. All these names are selling off because the folks are worried about the cutback in ad spend, and there were all these headlines to support that, right? Oh my, surveys are showing companies are cutting down in ad spend, and I wish you can get like, a day and time, right? At some point, I'm sure ChatGPT or some of these others, you'll be able to figure out a way to have like a snapshot of the sentiment and what the headlines were on that specific day. Because on April 7th, even before that, in February, March, there was all those articles about the recession that we're already in and all that stuff. And then you see some of these names sell off. But take a look at Roku, just a remarkable. It's almost like slow and steady to the upside. And traditionally or typically, Roku's a heck of a lot more volatile. I mean, look at its moves from in November, December, and even January of this year. So I don't know if that's the calm before the storm, and hopefully if there's a storm, it's to the upside. But I might, I keep looking for the August strikes, play for earnings, premium build. Don't be surprised to add some strikes there. And that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.